Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies and their SOFI stock price. In this video, we will be analyzing three articles, to where the first one is titled, Is SoFi stock a buy? So we'll be discussing whether or not investors should buy the stock right now at its current share price of $8.60, or if they should wait to buy the stock, and that's exactly where our next article comes in, because it's titled, and I quote, When should you buy SoFi stock? Here's the magic number. And spoiler alert, the magic number is $6 according to this article, so I will be adding my own personal opinion and my price target about when it's great to buy this company. Honestly, I would agree anything below $6 would be pretty good, especially if you can get the company for as low as $3 to $4. That would actually be ideal, because the lower the better, because the long-term prospects of this company are still intact. However, we'll be discussing the latest news updates regarding why the company is going to pull back in their overall share price and why investors should be aware of this. Lastly, we will round out the video talking about how SoFi Technologies shares have dipped even though the student loan moratorium is about to end, where student loan repayments will start to resume, and one research firm actually believes this company could surge as high as $14. So in this video, we are going to be going over both the bullish and bearish perspectives of this company, whether or not the company is going to fall down to $6 or lower or surge up to $14 once the student loan repayment moratorium officially ends, which should act as a pretty good catalyst. So for more videos on SoFi Technologies and some honest stock market news updates, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe for more videos on SoFi Technologies just like this one, and if you want to support me personally, don't forget to press that join button right next to the subscribe button so you can keep me here on YouTube for as little as 99 cents. But again, if you can't afford 99 cents per month, don't worry, you're going to be getting this content for absolutely free just by subscribing. So with that being said, I say let's jump right into today's stories. SoFi Technologies, as you already know, is a fintech company or a financial technology company that essentially operates as a digital bank. SoFi Technologies' share price has been on an absolute roll, with SoFi stock surging by around 78% year to date, which is absolutely amazing, and in previous videos I actually predicted this exact thing would happen. And as more investors start to warm up to the idea of 100% digital banking, SoFi Technologies is on investors' radar. And this might prompt even more momentum into the future. However, temporarily, I do believe the share price will pull back, which we will dive into in the next article. However, right now, investors don't really know what to do with SoFi Technologies. So now the question is, should investors double down and invest in this company more at the current share price, or wait for a pullback, or take profits, or wait for the company to surge potentially even higher? Let's address the latest news updates, some future catalysts, and where fundamentally this company could be headed in the short term, and I'll also add my opinion over the long term. So right now, let's dive into the recent trends, which is impacting SoFi Technologies. Investors currently right now are concerned about recession fears. There is a lot of expectations that the economy could enter into a full-on recession during the end of 2023 or sometime in 2024. And I understand that there are different definitions of a recession. The one that I normally follow is 2 quarters back to back where the GDP of the economy has been negative. However, there are different types of definitions of a recession. So essentially, we can just say that there are financial experts that believe the future of the economy and the stock market could be very negative coming up towards the end of the year. However, I personally completely disagree with that. Once we look at the actual metrics of the economy right now, we can see things are progressively getting better and not worse. We see inflation slowly becoming under control. The Fed is going to rise interest rates again, and that will further get inflation under control. We had a pretty good labor market increase, and overall, it seems that the economy is indeed bouncing back, so I really personally don't have fears of a recession. However, I do want to put it on your radar at least that there are other economic professionals that believe the economy could end up entering into a recession, causing a stock market crash, but I am not one of them. They believe this could happen as inflation gets out of control or interest rates get so high that borrowers could struggle to make payments on any debt that they have, which would then lead to banks defaulting in a banking crisis, and then a bank run, and then from that point onwards you would have a collapsed economy. So the potential risk of this happening is real, but I think we've already gotten a small taste of this, and the economy held strong. On top of that, let's go over some good news. In the latest debt ceiling deal, which is what everyone has been focusing on in the recent months, that worried investors because if the US government were to default on their overall debt obligations, that again would cause a stock market crash and a full-on recession. However, at least recently, the default was averted now that there is actually a resolution through legislation that led to the end of the student loan moratorium, where student loan interest will start occurring at the end of August or September 1st, and then payments will actually be due later in October. And this also depends on federal loans versus private loans and a lot of different types of student loans. But overall, thanks to the debt ceiling deal, which prevented the US from defaulting on their overall debt obligation, and it also put an end to the student loan moratorium, preventing it from being extended again, this has reflected very favorably for SoFi Technologies and their shareholders, which is why the company jumped so aggressively, which again we will talk about in the next article. Right now, I really want to bring the attention to the valuation of SoFi Technologies and why I am holding this company as of right now, and I am neither buying nor selling. In a previous video, you heard me say I took profit, so I did sell off some shares then, but as of right now, I am just holding this company, waiting for the share price to drop lower, and if I'm wrong and it actually surges higher, again, I will take profits from that, so either way, it's a win-win for me. Right now, the reason why I say that the valuation matters is that their shares are currently trading at a price-to-book ratio of 1.5, which is more expensive than they've traded over the past year. This PB multiple actually is slightly higher than that of JP Morgan Chase, which investors kind of use as the banking benchmark for the banking industry. It's the gold standard according to investors. So if you're trading above that, it means that you're kind of overpriced as of right now. At least your share price is overpriced. So right now, the SoFi stock price does not scream a buying opportunity, trading at around $8.50 to 60 cents. And that's why I personally am waiting for an overall pullback. But then this begs the question, just how much or how long will it take to pull back, and where could the shares end up finding support? Well, the next article answers that, and this author believes it's around $6, and I honestly would agree with him. Apart from this author as well as myself, there are several analysts who are waving the red flag on this stock right now, because there's been so much hype around SoFi Technologies lately that their share price is now disconnected from their long-term fundamentals. That's why being patient right now is probably the best opportunity. Now, for me personally, I do have a position in SoFi Technologies. It's around 3% as of right now, and I don't plan on selling or buying more until I get a good price. Therefore, I'm still very bullish and positive on the long-term prospects of this overall company, but I'm extremely cautious about what could happen in the short term. For instance, the reason why I am being cautious right now is because SoFi stock rallied from around $4.50 at the beginning of the year to nearly $10 in the middle of June. And with the price doubling in less than half a year, you should be concerned because stocks just don't act like this. And if they do, a pullback is most certainly imminent. Thanks to their new share price of over $8, it's very hard to justify the amount of financials that they are bringing in regards of their revenue to justify their current share price, especially since we can consider that the company is still unprofitable, and they've been unprofitable for quite a while. However, I personally think that we are going to get a phenomenal catalyst by the end of this year, where SoFi Technologies will become a profitable company by the end of 2023 or the beginning of 2024. So let's dive into what these analysts think. There are at least 3 professionals and experts, as well as analysts, who have expressed caution about SoFi Technologies. I like SoFi, I report on SoFi all the time, I own SoFi Technologies, I've made lots of money from SoFi Technologies by taking profit, but I want to practice proper risk management here. I don't want to get caught up into the bandwagon or the hype and invest more and lose money. I need to be smart, I need to manage my risk, and I need to be patient. First, let's start off with the Piper Sandler analyst named Kevin Barker, who downgraded the rating on SoFi stock from an overweight rating to a neutral rating. And he said the reason he did this was due to the change in their overall valuation. Just like what we talked about in the previous article, their valuation can no longer be substantially justified according to their current financials. The share price is just too high compared to their book value, and therefore it deserves this down rating. And this is just being realistic here. Another analyst from Oppenheimer named Dominick Gabriele downgraded SoFi Technologies shares and the overall SoFi stock price from outperform to just perform. And they essentially said that the current year-to-date year-to-date price rally was absolutely epic, but a pullback is necessary. So he's waiting for that pullback, and then once the share price gets cheaper, then he will reiterate that this company could be a buy rating. But at the current share price of around $8.50 or 60 cents, investors are taking on too much risk. Lastly, we have an analyst from Bank of America who downgraded SoFi stock from buy to neutral. Again, all of these analysts are downgrading from a buy rating to a hold rating, which is exactly what I have for this company. But clearly, we are not advocating to sell this company. Let me be very clear. We are not advocating to sell unless you want to take profits. This company is still fundamentally solid for the long term, but right now, their share price is disconnected from their overall fundamentals. Therefore, all of this positive news pertaining to SoFi Technologies, which has ignited their overall share price higher, is going to wear off. And many of these professionals, as well as myself, believe that all of this news has already been baked into their current valuation and their current share price. Therefore, the company does need to pull back and cool off to find a bottom. So at what price could the company pull back to? Well, honestly, it could take a few weeks for this company to pull back very slowly. So what price point should we be looking for? Well, honestly, despite these analysts' rating downgrades, we can see that the company could potentially fall to as low as $6 or below. So with this information, or the potential of it happening, what should investors do? Well, if you're bullish on this company, just like I am, and you have a long-term position, the best bullish strategy, in my opinion, would be just to wait. Wait for this company to pull back, invest any of your profits or gains back into the company at a cheaper share price, lowering your average cost, so therefore, over the long term, the fundamentals can take over, the stock price will increase, and you will be able to make more money considering you will now have a lower average price. Essentially, wait for the price to become reasonable, and then invest in this company without investing into this company when it's trading way too high. But now, since you've been educated on that stance, let's move over to another institution who believes the exact opposite, that SoFi shares will continuously trend upwards. And I do want to still put this on your radar because I personally could be wrong, and the share price of SoFi stock could go even higher during the short term as well. Because remember, my thesis is that the company is trading too high right now, it's going to pull back and then increase over the long term. However, this author and a research institution believes the sky is the limit for this company because they believe it could surge from the current share price of around $8.59 up to $14. So let's discuss exactly why that is. As we have discussed, shares have recently started to downtrend even after the Education Department's directive that student loan repayments will resume in October, to where clearly SoFi Technologies will be a huge beneficiary of this. And the Education Department even put on their website a notice which said, and I quote, "Student loan interest will resume starting on September 1st, 2023, and payments will be due starting in October. We will notify borrowers well before payments restart." So essentially, at the end of August or September 1st, we're going to see the student loan moratorium end. Therefore, interest will start to accrue on these student loans. And then in October, it's going to be a demand that people will have to start repaying on their student loan debt, which is going to be great for SoFi Technologies and increase their overall demand, thus giving them a lot of revenue because SoFi Technologies does student loan refinancing. However, some former students are still trying to hold out because there is still the Supreme Court decision, which could make or break the Biden administration's forgiveness plan for student loans, and that ranges anywhere between $10,000 and $20,000. This would mean that millions of people would clearly have a lower amount of student loans to pay back, and it would even clear around 14 million borrowers' overall debts because their outstanding balance would be completely eliminated. However, the verdict is out on that, and we are anticipating that the Supreme Court will reach a decision at the end of the month. However, regardless about what the Supreme Court says, the student loan moratorium ending is the larger catalyst here. Clearly, it would still be very positive if the Supreme Court denied the Biden administration's forgiveness plan, because that would mean SoFi Technologies has more of a total addressable market to refinance. However, even if it doesn't, the main catalyst is still intact, that borrowers will have to start paying back on their student loans, and therefore they are probably going to go to SoFi Technologies to lower their interest rate on those loans, thus saving money and making SoFi Technologies money. Lastly, let's talk about what BTIG Research had to say about SoFi Technologies and the student loan moratorium. Essentially, they said that SoFi Technologies, with this student loan moratorium catalyst, they rate SoFi as a buy rating and a $14 price target, which the company could achieve by the end of the year or occur over the next 12 months. So if you agree with BTIG's research, then feel free to hold or buy into the company. However, if you take my personal perspective of the company slowly pulling back to around $6 to $7 before then being reignited due to upcoming catalysts such as becoming profitable by the end of the year, then feel free to hold this company and then sell a little bit of your profits so you can reinvest back into this company at a lower share price, and then once the end of the year catalyst comes of them becoming profitable either at the end of 2023 or the beginning of 2024, that's where you're going to make the majority of your money, and then you just leave the rest to ride it over the long term after you've already taken out your initial investment. Therefore, your risk is essentially zero from that point onward. But regardless about what either one of these happens, this is good overall news for SoFi Technologies. On the one hand, you either get to buy the SoFi stock price for cheaper, or on the other hand, the SoFi stock is just starting their overall uptrend to $14 from $8.57. So in my opinion, it's a win-win scenario here, but I would love to hear your thoughts down in the comments below. Don't forget to go and annihilate that like button right now, especially if you made it all the way to the end of this video. Again, I'd love to hear your comments. Subscribe for more SoFi stock news updates or just general news updates, which I've been posting lately. I hope you all enjoy those. Also, if you want, go ahead and become a member of this channel for as little as 99 cents. And with that being said, I will see you in the next YT video.